Kilometer Muhammad Subaidi, metric number 280643. I'm from Group B number 6. So specifically for this assignment, we approached Clean Eat service company that have been operated for 2 years in Taman Permata, Kuala Lumpur, operating every day except for Sunday from 9 a.m. to 6 p.m. So the company focus on cleaning fabric and upholstery, including carpet, sofa, and curtain. They use two methods, which are cleaning at customer's house or compound area, and also cleaning at their own workshop. So throughout this video, we will explain about the cycles that we choose, which is revenue and cash receipt cycles. The explanation about how the company operation, transaction record, and the whole revenue related to the flow will be discussed here. What kind of system that the company use, the internal control procedure, and also strengths, weakness, risk exposure, and the alternative to control it, and also many more details is going to be discussed.
Assalamualaikum warahmatullahi wabarakatuh. My name is Kisna Umar. So ini I will proceed to the next part, which is I will explain about transaction cycle, table of entities and activities, context diagram, and physical data flow diagram. The revenue cycle is a set of recurrent company activities and related information processing procedures involved with selling products and services to clients and receiving payment in cash. For this cycle, there are two subsystems, which is sales order processing system and cash receipts processing system. There are many objectives of revenue cycle, and some of it is to make sure the record of sales order is accurate and promptly, which means that all sales that happen during the accounting period will be recorded accurately without miss any transaction. Second is to make sure the product or services will be shipped on the agreed date by both parties, which is customer and seller. Then to record and classify cash receipts promptly and accurately in the system so it will not affect the profit or loss of the company. Last is to safeguard product and cash receipts until it's shipped to the customer and deposited respectively. The first step to create an accurate data flow diagram is by creating a table of entities and activities. This list will lead to quicker and more accurate preparation of DFDs and a system flowchart because it clarifies the information contained in a narrative and helps us to document the system correctly. An activity is any action being performed by an internal entity or an external entity. Activities can include actions related to data such as file receive and other activities related to business process. Business process activities might include picking goods in the warehouse, inspecting goods at the receiving dock, or counting cash. For each activity, there must be an entity that performs the activity table. The table of entities and activities of this company can be shown by the table on the slide, where it starts with customer give order to sales clerk, and then sales clerk will receive the order via phone or text, and then the sales clerk will enter the customer details and orders such as type of item like car, sofa, or carpet into the system, and then computer system will generate the customer details and order automatically, and the process will continue until the end of the process where customer make payment via cash or credit or QR pay. First is context diagram. Context diagram, it just provides a summary of all transactions in the system where only one process in the system will be shown and the external entities. As below, the diagram just shows the order entry process in the system for customer, and it will deliver to the customer at the house or at the store itself after confirmation by customer about the order. Second one is a physical data flow diagram. It's a graphical depiction of the system that shows the internal and external entities of the system as well as the data flows into and out of these entities. A physical DFD specifies where, how, and by whom the processes of the system are carried out. A physical DFD does not provide information about what is being accomplished. As diagram on the slide shows physical DFD, where it shows customer makes order to sales clerk, which is the person in charge of taking order, and then all customer details will be generated to the computer system, which is QuickBooks or HubSpot. After the company have agreement with the customer about the date that has been set, and sales clerk already give verification about the services that will be provided at the customer's house or in the store, then service provider will be getting notification about confirmation service and provide services to the customer. All transactions and business process will be recorded in the computer system and will be updated in the master file such as customer master data, account receivable master data, and sales order master data.
Assalamualaikum and a very good morning. My name is Tuan Ani Shazwani binti Tuan Azizi and my metric number is 280680. Next is the logical data flow diagram for clinic. Okay, for your information, the logical data flow diagram is on a is focused on business and how it runs. It is unconcerned about how the system will be constructed. Instead, it defines the business events that occur. See here, the logical data flow diagram of Clinic starts with customer request service from the sales department, and then the sales department will generate the customer information to the computer system, and the computer system called QuickBooks. After that, QuickBooks will estimate the service quotation and send it to the customer. And next, after the confirmation of date, when and where with the customer, the service provider will receive the sales order of the services and will either pick up or go to the customer's house to clean to proceed their service. Flowchart represented as a connection and accounting information system input, operation, and output. The system flowchart starts by identifying the system inputs, and each input is followed by a process which describes the actions taken with the data. Here, we started with customer request cleaning services, and then the salesperson who take the booking of the customers will identify the customer and key in the whole information of the customers, which is the address of the customer's house, the item that they need to clean it, and other things. The salesperson will use the QuickBooks, which is the computer system that they use to estimate the quotation and send it to the customers. If the customer agree with the quotation, the whole price of the payment of their services, then the salesperson will use QuickBooks to estimate the quotation of the services and send it to the customer. If the customers are not agree with the price of quotation, with the quotation of services, they may be cancelled the order. But if they agree with it, they proceed the order and they pay the services. The salesperson can proceed with the order and create invoices and send it to the customers. And following the customer's confirmation of the date, the service provider will get the service sales order and will either pick up the items or approach them at their home.
So why would we need internal control? The internal control producer can ensure the accuracy and reliability of the accounting records and information to protect the company from being sabotaged by the other party other than the directors. The directors also use internal control to reduce the possibility of errors for the company. So the strength of internal control producers of the business activity can be shown when Clean8 applied 3 layers of control covering from preventive controls. By giving limitation access to the system, they restrict the system used to record the company accounting reports and marketing reports to only the directors. For daily transactions and records, controlled only by 2 of their staff, considering that these 2 are from admin department and accounting master users. They can amend and edit the details but still under their director's control. Clean8 also has a secret payroll database system which limits only for 2 of the permanent directors. This system keeps the payment data such as payment to employees' provident fund, which is EPF, and also social security organization, SOCSO, and wages contribution. The second one is detective control to help to detect every type of amendment in their system in details. So for example, Shafiq as one of the directors make an adjustment on their profit statement. The activity log including his name, adjustment date, adjustment time, and even the device that he used will be detected and recorded in the system. So this can prevent any irregularities in the company and detect where the mistakes come from. So the last one is corrective controls to reverse the effect of errors detectors. The directors will check the report to identify the source of imbalance and the amendments such as correcting the data entry errors. Clean8 applied control in every layer to avoid all the concern at all costs and able to protect the company from fraud and obstruction. It also helps to generate prompt and accurate reporting for the company. Thank you.
My name is Bhavani Devi Shanmugan and my metric number is 26489. Today I am going to present about the possible weakness with this appropriate transaction cycle. First weakness is structural weakness. Most of the revenue cycle activities are performed by these 2 staff who have excessive responsibility for the business in general and specifically for revenue cycle transactions or process. As well as receiving and approving customer orders, the staff also prepares the revenue cycle source documents such as sales order and maintains a general ledger and bills to the customer. Fraudulent acts may take place in this scenario. For example, the staff might have a conflict of interest with the customer and cheat the owner. They might also charge the customer at a higher price but record and report the transaction using the normal price. The second weakness is documentation and business activities weakness. Documents from the revenue center are not well pre-numbered. For example, they are inconsistently numbered, especially if the company begins using a computerized accounting system. Generating and analyzing the output or report will be challenging. As part of sales order entry, the sales clerk directly approves the order without checking the customer's credit records. It is possible that the customer has not paid a substantial amount of the company's obligation yet. The third weakness is internal control weakness. Internal control divided into 3 groups. First is organizational controls. Staff is responsible for many tasks that should be separated from one another, such as billing, accounts receivable, general ledger, and data processing. This could result in a conflict of interest between the staff and the customer. Also, the owner does not really examine the supporting documents. Second is management practices control. There are no written management policies concerning the revenue system such as credit approvals, account write-off, and sales and cash receipt procedures. As the business grows and employs more people to handle the revenue cycle activities, this might cause problem. It is possible that revenue cycle process might be performed under circumstances of ambiguity and discrepancy in the absence of written procedure. Furthermore, if they want to hire a new staff, they will have trouble training the new employee. Third is documentation controls. The revenue cycle documentation is not complete. There is a need for more copies of customer order documents as one is not sufficient. There is a possibility that the operations staff jots down the incorrect information if they only inform the customer order by phone. It could lead to misunderstandings. In the case of phone order, there are no original order confirmation documents from the customer and no order acknowledgement documents. Therefore, there is no binding contract and no evidence. Next, we move to the risk exposure from each internal control weakness. The first risk is fraud risk. When there is lack of supervision in the risk of fraudulent activities could occur in each cash receipt system. A disreputable clerk could take advantage of this situation to steal the check, cash it, and destroy the remittance evidence, leaving no trace of the transaction. The second risk is credit risk. The system of sales clerk is not checking the customer's credit worthiness exposes the risk of sales to customers with poor credit risk. Clerk or staff from the sales department are frequently compensated based on their individual sales performance. Under such situation, clerks in the sales department may be motivated to achieve the maximum sales volume rather than considering the credit worthiness of potential customer. The sales department could purposely allow poor and irresponsible sales decisions. Meanwhile, credit judgments that fall under the general authority of a salesperson, such as ensuring that the current transaction doesn't really surpasses the line of credit of the customer. This could be made faster. Sales to customers with bad credit seem to be more likely to lead to the customers failing to pay receivable, hence will be result in high bad debts. The third risk is false representation. A transaction error in the financial report will occur if an inconsistent customer order data is recorded in the system. As an outcome, the financial statement will display a deceptive representation. This could create conflict of interest issue between the sales clerk and the customer. Staff members have a variety of responsibilities that should be separated, including billing, account receivable, general ledger, and data processing. As a result, transactions that influence debtor balances must be accurately recorded and documented in a timely way to avoid a loss of revenues. Since only two of their staff handling and recording the transactions, they are high possible to record error and incorrect transactions. Combining these duties may possibly be in the lead to fraud and material mistakes. Eventually, it will have an impact on the account, such as incorrect balance of the account and inability to keep track the revenue and cash receipt activity. Last risk is system crash. System crashes are one of the biggest problems with any computerized system. Losing data can be consequence of a corrupt hard drive, a power outage, or other technical issues. When business cannot access the data they need, their operations are interrupted. To prevent data loss, business owners should regularly back up their data. That's all from me. Now I pass to the next presenter. Thank you.
Assalamualaikum and hi. My name is Muhammad Irfan bin Hamidun, metric number 280672. I will present the suggestion of internal control procedure. There are 3 internal control procedure, which are concurrent control, feed-forward control, and computer control. Number 1 is concurrent control. Concurrent control involves identifying and preventing problems in an organization as they occur. And this means that the system are monitored in a real-time situation. Concurrent controls begin with standards, and all employee activities is measured against the standard. For example, management sets a standard to measure against and generates a set of guidelines or regulations that employees are expected to follow. And this means that services can be checked and monitored as they are being performed to be sure and to ensure that the highest quality of services are being provided to the customers and clients. Secondly is feed-forward controls. Feed-forward controls involve identifying and preventing problems in an organization before they occur. Feed-forward controls are proactive and preventative. Feed-forward controls are helpful to managers because they allow the manager to plan work effectively. Examples of feed-forward control are implementing policies and procedures and separation of duties among the workers. As a result, future problems can be avoided. Although feed-forward controls can be costly and can slow down the planning process, but they help to avoid the problems that may be arise in the companies later on. And last but not least, computer control. The role of computers, software and information technology play in an organization's success. For accounting record purposes, for example, computers are used to receive and collect information, record documents and transactions using any accounting software or program. And this means the program files and data storage must be handled securely, as they contain the private and confidential data of the company. The examples are computer controls, limiting user access, secure with passwords, and resetting the password regularly, and also backup and store the data in a separate and secure location file. The revenue cycle allows businesses to predict cash flow and track transactions at all stages. It can ensure the accuracy and efficiency of sales and revenue records in a company. Without effective revenue cycle management, the company may expose to the risk of inadequate cash flows, inaccurate financial statements, and even insolvency. This can be shown by the risk exposure that might have resulted from each of the internal control witnesses identified in Clean E company. And despite there are few strengths of internal control procedures of the company's revenue cycle, appropriate internal procedures are still needed to overcome these identified weaknesses. Therefore, the study of the revenue cycle helps the management to prepare and decide the structure of the process to provide the best result and controls in managing the revenue cycle.